$71,000. That's how much one Bitcoin is worth. Think about it. That typically means if you had just 100 Bitcoins, you'd be sitting on a mountain of cash. We're talking about millions of dollars here. But what if I told you that up until 2010, Bitcoin was worth absolutely nothing, like $0? That's right. But in just 16 years since its invention, BTC has managed to skyrocket its market cap to well over $1 trillion. Now that's insane. So how on earth did it pull off such an epic rise in such a short time span? Strap in, folks, because this is the jaw-dropping story of the most valuable coin on the planet. You see, Bitcoin as we know it today was officially invented in 2008 by a guy called Satoshi Nakamoto. But let's be real for a sec. The story of Bitcoin really began over 4 decades ago with the idea of one American computer scientist, David Chaum. Back in 1982, Chaum penned a paper titled Computer Systems Established, Maintained, and Trusted by Mutually Suspicious Groups. It may sound like a mouthful, but it laid down the foundation for what would become the blockchain revolution. One of Chaum's big ideas in that paper was electronic cash. He imagined a type of money that people could pass around safely and secretly, kind of like how we use cryptocurrencies today. To make this happen, Chaum created something called a blinding formula. With this formula, he also created blinded cash, which was a way to transfer money between people without anyone snooping in. Here's the beauty of it. Each transaction is wrapped up tight with a signature of authenticity. In a nutshell, he figured out a clever way to securely send and receive digital tokens without needing some big boss overseeing everything. It was like sending a secret message that only the intended recipient could decode. So in the 90s, Chaum took his theories for a spin and launched his own digital currency called eCash through his company DigiCash, a primitive version of crypto that required users to designate encrypted keys before sending funds to another user. With that, DigiCash officially became the first digital currency ever designed that could not be traced by any bank or government. It was so impressive it even got the attention of giants like Microsoft, as Bill Gates wanted to integrate it into every single Microsoft product. Back then, eCash seemed like a dream come true because, for one, it was solving all the headaches of credit card payments with its perfect security and no pesky fees. But David's bold move didn't sit well with the government, who saw it as a threat to their control. Sadly, DigiCash ran into money problems and closed up shop by 1998. On the bright side, Chaum's eCash experiment wasn't a failure. It was more like a spark that ignited the whole blockchain bonfire, because soon after, other computer scientists began to follow in his footsteps. For example, in 1996, Dr. Douglas Jackson and Barry Downey introduced a groundbreaking concept based off of Chaum's idea. They called it e-gold. This digital currency enabled users to swap ownership of gold seamlessly through a website. DigiCash also ignited a movement among cryptographers, hackers, and activists united through a mailing list. This collective, including DigiCash pioneers like Nick Szabo and Zuko Wilcox O'Hearn, became known as the cypherpunks. They were all about keeping the dream of electronic cash alive. They pushed the boundaries even further than Chaum, proposing alternative digital currency systems in the 1990s and early 2000s. Then, out of nowhere in 2008, someone registered the domain name bitcoin.org on August 18th. And about 2 weeks later, on October 31st, a link to a white paper by someone named Satoshi Nakamoto titled Bitcoin, a peer-to-peer electronic cash system, showed up on a cryptography mailing list. In that paper, Nakamoto basically laid out the game plan for what would become Bitcoin to the world. Remarkably, it set off a domino effect in the world of cryptography, completely altering the way we think about money and finance. But here's the twist. Nakamoto never spilled any personal details about themselves, and their identity remains a mystery to this very day. On January 3, 2009, Nakamoto kickstarted the Bitcoin network by mining its very first block, called the Genesis block, and received 50 Bitcoins in his wallet. What's intriguing is that within this block, Nakamoto included a snippet from the Times newspaper dated January 3, 2009, with the headline that read "The Times 03 Jan 2009. Chancellor on brink of second bailout for banks." Now, while it's not exactly clear what the message means, some folks believe that he was talking about the economic conditions at the time, while others believed it was a clue to Bitcoin's purpose for existing a response to a broken financial system. 9 days after the Genesis block, a cryptographic enthusiast named Hal Finney received the very first Bitcoin transaction, 10 Bitcoins sent by Nakamoto. And at this point, Bitcoin was worth $0 at best. It wasn't until 9 months later, on October 5, 2009, that the new Liberty Standard established the first ever Bitcoin to dollar exchange rate, pegging $1 to a whopping 1,309 BTC. To put that into perspective, that's roughly $100 million in today's money. In May 2010, the first ever tangible item was purchased with Bitcoin, and you probably already know what it is because it's arguably one of the most iconic moments in Bitcoin history. You see, at the time, programmer Laszlo Heinczek bought 2 Papa John's pizzas for 10,000 Bitcoins. This transaction has become legendary within the Bitcoin community, and every year on May 22nd, Bitcoin enthusiasts celebrate it as a meme holiday. It's pretty mind-blowing when you realize that those same Bitcoins would be valued at over $700 million by today's standards. On August 6, 2010, a big problem cropped up in the Bitcoin world when a glitch was spotted in the system that allowed for some sneaky maneuvering. Just over a week later, someone exploited this loophole, creating a transaction that tried to send an insane amount of Bitcoins, even though the system was supposed to make sure no one could spend more than they had. Luckily, the Bitcoin community quickly spotted the issue, patched things up, and rolled out a fix. Miners got to work, updating the system to ensure it wouldn't happen again. And you know what? This hiccup remains the only major security flaw in Bitcoin's journey so far. According to blockchain experts, Nakamoto had mined around 1 million Bitcoins before disappearing without a trace in 2010. But before bowing out, he handed over the reins to Gavin Andresen. Around this time, Bitcoin's price took a surprising leap from its steady 10 cents mark to 20 cents on October 26, 2010. By the end of the year, it had climbed even higher, hitting 30 cents. Then in 2011, things really started to heat up as it surged past the $1 mark. The excitement peaked on June 8, 2011, when it reached an astonishing $29.60. As Bitcoin gained popularity, people became curious about other digital currencies outside traditional banking systems. That's when altcoins entered the scene as alternatives to Bitcoin. These altcoins often come with upgrades like faster transactions or better privacy features. Take Litecoin, for example. It's like Bitcoin's sidekick, known as the silver to Bitcoin's gold. Following some initial experimental transactions, the first significant adopters of Bitcoin were found in the shady corners of the internet, particularly on the dark web's Silk Road. From February 2011 onwards, over a span of 30 months, Silk Road conducted all its business exclusively in Bitcoins, processing transactions worth a staggering $9.9 million, equivalent to roughly $214 million. By 2012, Bitcoin was starting to gain some serious traction worldwide. For example, in January 2012, Bitcoin got its Hollywood moment on the CBS legal drama The Good Wife, in an episode titled Bitcoin for Dummies. Even Jim Cramer from CNBC's Mad Money made an appearance, testifying in a courtroom scene about his views on Bitcoin, arguing that it wasn't a real currency because it didn't have a central bank and operated purely peer-to-peer. Then, in September 2012, a group of Bitcoin enthusiasts banded together to form the Bitcoin Foundation. Their goal was to give Bitcoin a boost worldwide by setting standards, safeguarding its integrity, and spreading the word about its open source protocol. It was like forming a superhero team for cryptocurrency. By October 2012, BitPay, a payment service, hit a major milestone, proudly announcing that over 1,000 merchants were now embracing Bitcoin payments. It was a clear sign that businesses were recognizing the potential of this digital currency and eager to hop on board. And just when you thought things couldn't get any cooler, in November 2012, WordPress, one of the internet's biggest platforms, decided to hop on the Bitcoin train, opening its doors to cryptocurrency payments. It was like the ultimate stamp of approval for Bitcoin's growing popularity in the digital world. In February 2011, the exchange Coinbase made headlines by reporting a whopping $1 million in Bitcoin sales in just 1 month, with each Bitcoin fetching over $22. Meanwhile, the Internet Archive, a digital library, announced that it would accept donations in Bitcoins and even offered its employees the options to receive parts of their salaries in Bitcoin currency. In February 2011, the exchange Coinbase made headlines by reporting a whopping $1 million in Bitcoin sales in just 1 month, with each Bitcoin fetching over $22. Meanwhile, the Internet Archive, a digital library, announced that it would accept donations in Bitcoins and even offered its employees the options to receive parts of their salaries in Bitcoin currency. Coincidentally, in Charles Stross's 2013 science fiction novel Neptune's Blood, the futuristic payment system is dubbed Bitcoin and operates using cryptography. Stross later revealed that the reference was intentional, as he believed Bitcoin had just enough recognition to be a fitting term for an interstellar currency in his novel. Unfortunately, March 2013 brought some turbulence to the Bitcoin world as the blockchain, the transaction log, experienced a temporary split in 2 independent chains with differing transaction rules. For 6 hours, 2 separate Bitcoin networks operated simultaneously, causing confusion and promoting a sharp sell-off. To restore order, core developers called for a temporary halt to transactions until the majority of the network was downgraded to version 0.7 of the Bitcoin software. The Mt. Gox exchange briefly halted Bitcoin deposits, causing the exchange rate to dip by 23% to $37, before rebounding to around $48. In November 2013, Bitcoin shattered expectations by crossing the $1,000 threshold for the first time ever. However, due to concerns that the black market use of cryptocurrency, several countries began to implement regulations for the use of Bitcoin. Notably, the People's Bank of China has been at the forefront. China dropped a bombshell in December 2013, banning financial institutions from dealing with Bitcoins. According to them, the ban was enforced because Bitcoin wasn't backed by anyone important, so it couldn't be a real currency. This crackdown led the price of Bitcoin to an insane nosedive because at the time, China was responsible for about half of Bitcoin transactions worldwide. I mean, even Baidu, one of China's tech giants, stopped accepting Bitcoins for certain services. During the price lull, some of the early adopters of Bitcoin faced significant losses, which led to a wave of negative press for the cryptocurrency. The media coverage was extensive, and for many, it was their first introduction to the world of cryptocurrency, often in the context of these unfortunate financial setbacks. And if things weren't already chaotic enough, just about a month later, the largest theft in crypto history rocked the industry. Hackers made off with a staggering 850,000 bitcoins, leaving everyone stunned. And to this day, the identity of the culprits remains a mystery, thanks to the inherent anonymity and decentralization of cryptocurrency. Critics were quick to highlight how these features make crypto vulnerable to hacking, with perpetrators often slipping through the cracks. But the drama didn't end there. By the end of the year, the founder of the Silk Road crypto website was handed a life sentence after the site, which was infamous for facilitating illegal drug sales, accounted for a whopping 70% of its transactions. This revelation tarnished Bitcoin's reputation, as it was the currency of choice for these shady dealings, allowing both buyers and sellers to operate under a veil of anonymity. In 2015, Ethereum shook up the cryptocurrency scene with its game-changing features. For some, it represented a significant leap forward in the evolution of blockchain technology, offering what they considered to be the first truly practical implementation of the concepts originally introduced by Bitcoin. One of Ethereum's groundbreaking features was the introduction of smart contracts. These contracts enabled the blockchain not only to handle cryptocurrency transactions, but also to host software programs. This innovation opened up a world of possibilities, allowing developers to create sophisticated applications in various fields, including finance and beyond. But Ethereum didn't stop there. It also introduced the idea of hosting multiple currencies on its platform. So not only could you use Ethereum's native currency, Ether, but developers could create their own custom currencies and run them on Ethereum's network. This combo of smart contracts and custom currencies was like rocket fuel for developers and entrepreneurs. It opened up a whole new world of possibilities, from creating decentralized finance applications to launching your own digital tokens for all sorts of projects. Ethereum's rise in popularity coincided with a surge in crowdfunding projects, known as initial coin offerings. These ICOs were like digital versions of IPOs, offering new tokens to investors. People eagerly invested in these projects, hoping for big returns or simply to support innovative ideas. Sadly, the ICO landscape was a mixed bag. Some projects were poorly planned or outright scams, while others laid the foundation for groundbreaking products and services. In 2017, more and more businesses jumped on the Bitcoin bandwagon. In Japan alone, NHK reported that the number of online stores accepting Bitcoin shot up by nearly 5 times in just a year. It was like Bitcoin was becoming the new cool way to pay online. BitPay also saw its transaction rate triple from 2016 to 2017. That's a lot of people using Bitcoin to buy and sell stuff, especially in business-to-business payments. But it wasn't just businesses getting in on the action. Even governments and big financial companies started taking Bitcoin seriously. Japan passed a law saying Bitcoin was a legit way to pay for stuff. Meanwhile, on the trading side of things, it was like a frenzy. One exchange in Mexico, Bitso, saw trading volume shoot up a mind-blowing 1,500% in just 6 months. It was clear that a lot of folks were getting into the Bitcoin game, whether it was to buy stuff, invest, or just ride the wave of excitement in the world of digital currency. In 2019, Bitcoin faced a rough start, trading below the 4,000 mark after a challenging year for the global crypto market. However, it soon began a remarkable ascent, reaching just over $12,000 by July. Since then, its value has continued to climb steadily, with occasional dips along the way, and now it's reached an all-time high of $73,000, leaving many in awe of its growth. With over 21,000 cryptocurrencies listed by CoinMarketCap, Bitcoin remains at the top of the digital currency heap. Crypto enthusiasts often hail it as the future of money for several reasons, but chiefly because it has established itself as a reliable store of value. People can easily buy Bitcoin with gift cards, credit cards, or cash and hold on to it for a long time. And this resilience and versatility right here have led many to predict that Bitcoin will play a significant role in shaping the future of money.